Go live, go live, go live. What's good? What's good? What's good? What's good, family? Man, happy Sunday. Welcome, welcome. I'm gonna give it a second. I know it take a second to get adjusted and to get everybody in here. Like, I'll be live for like 20 seconds and then I start to see the numbers come in. So, what's good, man? What's good? Come on in, come on in. Listen, if you new to the show, drop a comment, right? If you're a returner, drop a comment because I'm gonna come to them in a minute. In a minute. Now, look, I know it's football Sunday, right? And I probably ain't gonna have no Cowboy fans on here tonight because they got smoked. So I expect the viewership might be down a little bit tonight because Dallas fans is super salty right now. And I'm repping for my Steelers squad tonight, man. Our game was postponed, so we played them all. We got the Bills. So shout out to the Steelers gang, man. Hopefully we can pull this thing out. But yeah, the Packers, wow. Dallas fans is salty. That's probably not a good way to start off my show. I know, man. Dallas fans, they heavy, man. They are heavy. All right, so man, listen, man. Welcome to Sativa Sunday, the stock market show that combines fundamental, macro, and technical data into an agile format to help you develop an edge in the marketplace. I'm your host, Zeta Wealth Strategist, and welcome to tonight's show. The only place you could be wrong and still make money. The Art of the Pivot, Part 2, Episode 53. So I definitely want to welcome you all to tonight's episode. We got a great show tonight. And before we get into the show, I definitely want to give a big shout out, right? I got to give a big shout out to my community. So first and foremost, I want to give a big shout out to the runners community, right? If you don't know, I do have an awesome community that we have 3 core values, right? Number 1 is we focus on psychology and mindset. So helping investors and traders get your mindset right, understanding how to get through the ups and downs of the market. Number 2, having a process and data-driven format, right? So what you see I do here, I help other traders and investors take that format, put it into what they like to do, and ultimately start making data-driven decisions, right? And then last but not least is emotional control, right? So helping you control those emotions, data over emotions, discipline, habits, all of those things that ultimately can help your life better, but also make your trading better, right? So how do we do this? We have a great book club. Now, listen, I'm gonna be real, y'all, right? I told y'all the book of the month was Art of the War. So it was a short book, and I finished it. But I gotta be real, that jank was trash. I ain't like it. It was not my taste. The only reason I finished it was because it was like 80 pages or less. But I guess I'm not like a military guy. Like I thought I was gonna be able to translate it, but some of the summaries was better than the book, right? So that's kind of what helped me. But anyway, so because we finished that quick, we are going to rerun back the 12-week year. And that is a much better book. So not only that, then we also have the Health is Wealth Club. We have bi-weekly Zooms with guest speakers. We have a library of over 200 hours of content. And I'm thinking about doing something special with that content. I think I'm going to start uploading some of the special videos and sessions we had to my YouTube channel. However, what I'm going to do is I'm going to make those like exclusive videos. So I'm going to launch a YouTube membership, and then you can get like special access to some of those special exclusive videos. Like this upcoming year, we're doing like how to read premium manipulation, right? Like I might make that like a special video as part of YouTube, but it might be something I'm working on. I'm trying to add some verticals. You feel what I'm saying? I'm trying to add more value, but also get value back. You feel me? But that's just something I'm flirting with. But that's what we do in the runners, though. So you already have that, right? And then that's when I at least got to give a big shout out to the Patreon family as an extension of the runners community. Same thing. So you just get a nice little letters format. You still get invited to all of the meetings and all of that we have, as well as we have our own private chat for the Patreon family. So shout out to both of them. And for supporting your boy. So if you don't know, the link is down in the bio if you want to join the runners community. So last but not least, please like, share, and subscribe. I want to give a big shout out to the viewers last week, right? So one of my goals for this year for Sativa Sunday is that I do want to try to average 1,000 views a week, right? That was one of the big things that I said I wanted to do. So I said, I need y'all help. I need y'all to share. So I want to say last week's episode did reach 1,000 views. So I'm very thankful. I'm appreciative. for everybody that shared, for everybody that tuned in and watched the show. So very first episode, we did hit 1,000 views. So shout out to all the runners. Shout out to the Sativa Sunday people, man. I really do appreciate y'all. So make sure y'all hit that like button and hit that share and subscribe if you already haven't. So with that being said, I'm gonna come show some love in the comments real quick, and then we're gonna get into the show, man. So who do we have tapping in? Curtis Freeman, good evening, Nuke from Ann Arbor, go blue. Hey man, shout out to you, Nuke, and congratulations to University of Michigan. They did win the national championship, so that's why he repping that go blue, man. Appreciate you for tapping in, Nuke. Cornell, good evening, family. What's good, my guy? Appreciate you for tapping in. We got Dominique in the building. She say blessings. That's a runner family. What's good, Kev? My boy Kevin in the building. What's good? Brian S.A. Dallas sucks. We got some Dallas haters. Yo, I wish the market was as predictable as Dallas. Look, them Cowboy fans about to catch it, boy. Go Lions. Okay, who did they play? I'm not sure they played already, but I know they played somebody. Eagles. Hey, listen, man, I heard Jalen Hurts hurt. Y'all ain't got, what's up, Michelle Tucker? How you doing? And then Brian Crooks is in the building. What's good, family? So appreciate y'all for tapping in. All right, man. That's all I see in the comments right now. And I'm gonna be honest, I do be watching the playbook, and not all of the comments do be showing up. So if I miss your comment, I do apologize. But with that being said, let's get into tonight's show. Now, usually, right, I save my monologue, or y'all know, like every episode, I have a theme, right? Or I try to have a message, right? I try to, within the fun, the the edutainment, I try to always deliver some type of message that, a trader can take or an investor can take that is relatable, or what I'm going through my current journey, whatever, and, and try to share it and just make it a lesson that you can learn from. And so this week, as the week was playing out and I was getting ready for Sativa Sunday, all I could keep thinking was like, boy, I'm gonna catch some heat. Because I was talking hella trash last week. So with that being said, the first thing I'm gonna do before I even get into the show even further is I'm going to apologize to the herd. I am going to apologize for calling y'all the dumbass herd, because y'all was right. Y'all, the market kept pumping and I was wrong, right? My thesis for last week, I was like, we need to be thinking about fading the herd, and we're going to get into all that. But listen, sometimes, the herd can be right. And that's why tonight, whatever, this is all about a rehash of the art of the pivot and all of that, and just saying how you need to respect the market. Because also, if you watched last week's episode, I had a very hard level that the Bears had to maintain, which was 47.27. If you go back and watch last week's episode, I said, listen, if the Bears don't hold this number, then toss everything I said out the window about us being bearish, because the Bulls is back. Right? And, and so basically, right, what I wanted to start with tonight is I wanted to start with the monologue. So tonight's episode, this is the only place you can be wrong. The stock market is the only place you can be wrong and still make money, right? So that's why it's important to have levels, respect your levels, have pivot plans, right? So you can manage out of a drawdown, and ultimately remember, data over emotions. Remember, we just trying to get that dough. It ain't about being right or wrong. You know what I'm saying? And at the end of the day, it's about getting that dough, man. And so with that being said, we're going to go ahead and we're going to get into tonight's show. So we're going to start with the recap, right? So obviously, we had a great week, right? The Bulls came back. I mentioned last week I was looking for a weekly follow through, and we did not get it. We did not. If anything, the Bears got smoked, right? And so, let's talk a little bit about the highlights and how it all came about, right? So the number one recap is, man, number one, the freaking NASDAQ, right? If you look at last week and we go to the NASDAQ, right? On Monday, 2% out the gate, right? Out the gate, the NASDAQ rebound. So we talking about NVIDIA. I mean, all of the leaders, right? They came out the gate, storming out the gate, bam, and, they blitzed the market, right? They blitzed the market. If we go back to the SPX, on Monday, we was up 1.4%. We made it from freaking when we closed on Friday, we closed at 46.97. On Monday, we was all the way back up to 47.63. So remember, right? Last week, I had pointed out, I say, look, this Wednesday high, this 47.29, it gotta hold. If this don't hold, the Bears, they weak, right? They weak sauce. I say, look, man, they weak sauce. If they can't hold that, they're gonna be weak sauce. So on Monday, right? On Monday, that joint got snapped and we went all the way through. So the reason why I also want to have this recap, and the reason for tonight's title of the show of at least the second half is the art of the pivot part 2, is that, you know, if you follow me on Twitter, you know what I'm saying, y'all know I like to mess around or whatever, but I'm like, yo, I was like, yo, I'm out, and then I say, hey, I'm joining the herd because, you know, this is what I'm seeing. Now some people say, hey, you know, they had questions, well, Jose, what did you see that made you pivot? You know, what was it that you was like, okay, I'm giving up on the Bears thesis, I'm going back on this, right? So that's kind of some of the stuff I want to talk about tonight and start to point out. So number one, right? Number one is I had the hard level of the 47.29, right? Once that got snapped, I'm already like, okay, I need to be thinking pivot. Number two, look at how bullish this candle is. So we engulfed 1, 2, 3, 4 days, right? So that right there in itself is head on a swivel. And if you remember the very first art of the pivot episode when we got the PAL pivot, right? That bullish engulfing weekly candle we got, it was the same situation, right? Like you have to respect that this is a big shift, right? This was a big shift in the market, right? And then you had the leaders also bounce back, meaning the tech, you know, NASDAQ rebound. So I'm like, okay, not only did my bearish level get broke, you know what I'm saying, but bullish engulfing. So now I'm like, okay, first of all, my thesis is wrong, but it's cool. I can still make money because I could pivot, right? So this is the reason for the title episode. The only place you could be wrong is still make money, the art of the pivot, right? And if you remember last week, I had backup plans like, yo, if this happens, then I'm ready to pivot here, right? So on Monday, after that situation happened, rest of the week, all I'm thinking about is, okay, let me find somewhere to pivot because clearly for the rest of the week, we trying to go up and we might go make all-time high. Now, that gets me into the rest of the week and the rest of the catalyst and why we failed. Well, we did hit 4,800. I'll get into that in a second. However, we did not close, so therefore we failed to close at an all-time high, but we did hit 4,800, right? And so let's get into the next highlight, right? So the next highlight was inflation week, right? So when we think about inflation week, we did get some mixed data, right? We did get some mixed data. And let me go back here. Let me see. Okay, this is what I wanted to show you, right? So shout out to Wells Fargo. Let me see if I can zoom in here. Yeah, so now hopefully you can see this. So stocks drift higher on inflation data. And if I go to weekend in review, this is basically what I wanted to show you, right? So inflation data was in focus this week with CPI and PPI, right? CPI inflation showed little progress towards the Fed's 2% target, with stickier components such as shelter remaining elevated in a resilient labor market, right? So headline increased by 0.03 and the year over year was 3.4. Now, core, on the other hand, was unchanged, right? And was a 3.9. So we got under 4%. So that is what is probably most important, right? And we know that the Fed is ignoring shelter for the most part, right? Although the pace of shelter year on year increase, it has been slowing every month since 2023. Blah, 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 blah. That was CPI. It came in hotter than expected. Well, I'll get into the technicals in a second, but just know that. Then PPI came back. This is why I said it was mixed. PPI fell and was below expectations, right? Which ultimately pointed to that CPI reading we got was probably just a one-off. And that's why, when we get into the technicals, the market bucked the trend on Thursday, right? So when you think about it, the rest of the week we was going up. As we talked about it, the last 2 days of the week was all about inflation data and earnings. And so that's basically what I'm recapping. So we got inflation data, we sold down, right? And then we pushed up, right? And ultimately PPI came in and was like, okay, it was just a blip, right? And so now we get into Well, it'll carry us into this week, but ultimately that was one of the highlights. And so now what I want to do is get into the other highlight, which was earnest kickoff. Now I see a comment that just came in, and I want to pull this up. So shout out to my dog Omar. He said, "Yo, I just watched episode 48. You called this when you brought up the mixed data and how it could bring inflation higher December or January." I appreciate you, Omar. So go check out episode 48 because I talked about like we might see a little like my point was this, and I'll go to the CPI chart because this is exactly what he's talking about. And then we go to the line. Y'all know I love my pivots. Y'all know I love my pivots because this is exactly what Omar talking about, right? Is if I go zoom in, right? And we thought about how expenses went up and stuff like that. This was bound to happen. So I won't get concerned unless CPI crossed this 3.8, 4.0 threshold. It's just like any other chart we read. This is our base. And you know what I'm saying? Is we making a double bottom? And are we about to see inflation go on a rise? Or is this going to be a breakdown and we come lower? Honestly, I think we just might range here. And like Omar said, I talked about this on previous episodes that I think if energy will contribute to the ebbs and flows, and we're gonna get into energy tonight as well, right? Because there's a lot that we got to cover. But just know that inflation came in mixed, and ultimately the data kind of reports to this maybe being a one-off. However, this Red Sea stuff and this energy situation, we're gonna have to watch that very closely because things is heating up. Things are heating up. And if energy goes off track, you already see what we could be looking at. All right. And this is just the headline number. So that's the reason why I'm pointing that out. Core is still good, right? Core is still good. Now, the last thing we had was bank earnings this week, right? So that gets us to Friday. And ultimately, if we go look at like the big dogs that reported, it was basically JP Morgan. And JP Morgan did good, but clearly they sold off. Wells Fargo, or where's it at? Wells Fargo. What the hell? Wells Fargo, WBC, right? Well, Wells Fargo sold off. I think Bank of America sold off. Well, it bounced back. Citi, right? Sold off or kind of bounced back. So at the end of the day, right? Bank earnings came out. And what I would say about banks earnings is that they were in line, right? Ultimately, it didn't point to any cracks or anything like that. Okay. I do have some data to share. And shout out to, I'm not sure who I was watching, but Bank of America, right, published data on the consumer. And this is going to be important because this leads into this upcoming week when we talk about the state of the consumer. But what they pointed out about the consumer was this. They were saying that, and this, I'm also going to tie this into like how the data ain't really pointing to a recession, but the lower income people, I understand they feeling it, but here's how they going to skew the data. Okay, they're going to skew the data on us, right? Basically, what they were saying was this: the lower income people that typically average, say, $6,000 in their bank account. Bank of America reported they now have an average of 13,000, right? And so the story of or the narrative of the savings dwindling and stuff, we don't see that yet, right? Now, while yes, you have a bigger bank account, that I would say that accounts because inflation went up, right? Everything costs more now. So you need to have more money in the bank account because eggs is more, food is more, gas is more. So it's almost like a net effect. Yeah, the lower income people have more money, but just the same everything stuff they buy also went up. So they gotta have more money. So I thought that was interesting data. My point is this: it's all about how it's portrayed in news and the media. And so ultimately, they're going to say the average American is doing better because they have more money in the bank account, even though stuff is more, being is sort of more priced. But I just thought that was something interesting that came out from the banking data. A few of the banks had some loan losses and stuff like that, getting ready for that. And so that was the reason why they was kind of hit. But ultimately, it was okay. We know that, and I would say this was normal behavior for the banks, right? JP Morgan usually pops and then sells off. I mean, if you go through all the past earnings, this is probably typical normal behavior, right? However, when we get into earnings this upcoming week, we're going to see a lot of the regional banks and stuff report. And I think that might be a setup for a nice buying opportunity. And we'll get into that in a minute when I show the earnings calendar. But case in point, big banks reported, economy is doing better than expected. That was the outcome of that. And so what I want to say is this, right? As we wrap up this past week and we go through all of the indexes, here's what we have, right? So we had a market that did a 1.5% pullback, and then this upcoming week it was up 1.84%. We go look at the Nasdaq; it did a pullback of 3%, then was up 3.2. We go look at the Dow; it was down 0.5 and then up 0.34. So that strength that I was talking about. And then we go look at IWM. The small caps is what kind of concerns me. However, it doesn't concern me in that it was down 3.6 and then it just consolidated, right? So it didn't have a bounce back. So with that being said, here's my initial thought. My initial thought is that after these first 2 weeks, what has happened is the market may have, I'm not 100%, y'all know I operate in terms of probabilities, but I think it's a probability the market has done a good job of pricing in no rate cut for March. And maybe we might have a little bit more adjusting to go, but as far as the data goes, as far as labor market and inflation, he's still likely to pause in January, and he's still likely to keep the same messaging as the December meeting. Meaning, I'm telling y'all, we ain't gonna get no real update until March, because the March meeting is when we get a new SEP and we get a new dot plot update. So do not, they're gonna run the story that this January FOMC meeting might mean something, but it ain't gonna mean shit. I'm telling y'all, it ain't gonna be nothing but a manipulation factor right there, because it won't be no earth shattering information that Jerome Powell is going to share. When we look at those FOMC minutes, we already know that yes, they plan to cut, but the path is uncertain. That's all he gonna say. He gonna come in January and be like, yo, look, the data say we good. We can hold it here. We're not in no rush to cut because the labor market's still kind of strong. Inflation is somewhat still on this downtrend, even though we just had that little bit of an uptick. We just want to be in a wait and see mode. So the pivot, like I said before, may not come, right? I think I had this in my notes. So let's get to the board. When we look at the leading narratives, where we at? No, I don't. I think I had it somewhere else. But my point is this: I don't believe the pit, or maybe I had it under here. Ah, yes, I did have it under here. Okay, let me zoom in so y'all can see that a little bit better, right? So basically, this is what I was saying is, do we see the Fed pivot in March of 24? Cuts as early as June 24. That's my thesis, right? That's what I believe, the Fed path could potentially be based on the data and what they've been saying, right? And I don't expect no real update until March, right? So that's a January meeting. It'll be to me, it'll be a nothing burger. And so, when we had this little bit of a pullback, like I said, I think we could have been pricing in no rate cut, or maybe it was just that kind of scare. And so with the labor market and inflation still likely to pause, I'm going to be real, y'all. It brings me back to my original thesis that I had before we left off in 23, right? Before we left off in 23, I think was with my boy Omar. He could probably correct me if I'm wrong, because it would have been one of the last 2 episodes that I did where I made a bold proclamation. I was like, yo, we might go on a 13-week run, right? And this was when we was kind of like down here. It was more in December. And if y'all stuck around and saw that episode, y'all remember, like, yo, I was like, yo, we might go on a 13-week run. We might have like 1 or 2 sideways weeks, but we gonna run. And I said, yo, my thesis was it would put us at like 4,900 by like mid-January. So after going back and watching the tape, I have to say that bold call it might be a pretty goddamn good call, because this week is week number 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have been up the last 10 weeks out of 11. And you know what I'm saying? So what I'm saying is this, right? With this bullish engulfing candle, clearly I was wrong last week about fading the herd. And after 10 of 11 bullish weeks, 16.5% off the low, a lot of people are asking what is next, right? What is next? And shout out to my boy King Ray. He said that was December when you called that out. Appreciate you, my guy. And then also shout out to Kevin. He said, yo, the regional banks will run before and then sell off after earnings. TFC key could be a good buy after the setup for the later months. That's yeah. So go look at those. TFC, I think it's Truist, right? Well, I'll go deviate. Ooh, that setup look real good. Look at that gap. Oh my lord. That's Truist. So that's SunTrust and BB&T, and then Key Bank. So that's in the run. That's in the gap too. So Key Bank is one that I called out for a freebie Friday on the Patreon. And like soon as I called it out, like yo, we was like 100% in the money, and it just been going sideways since then. Like since we had that big run, it ain't went nowhere. And I actually think they have earnings this upcoming week. So if it do good again, they probably gonna close this gap. I like this bank. It's a major bank. So shout out to Kev for that. And then my boy Jarrell say, what's good? What up, man? Appreciate you for tapping in. So I believe we're going to consolidate. If I had to pick a side, I'd be bearish. Appreciate you for tapping in, my guy. So y'all got his perspective. He say, look, he think we might consolidate, but he might be bearish, right? So that's just, and that's the thing about being agile trading is that I try to take in as many as perspectives just so I know where things could possibly go. But getting back to what I was saying. So so 10 out of 11 weeks have been bullish. So what's next? Right. So that gets me into this upcoming week. Now, the very first thing is that it's a short week, right? It's a short week. So tomorrow the market is closed, right? So shout out to MLK, right? I gotta get goddamn, I feel bad, right? Shout out to MLK, right? Shout out to one of the GOATs. We're gonna celebrate that black man, you know what I'm saying? He did great things for the culture. And so it's MLK Day, right? And so the market is closed, right? And for the runners and the Patreon family, they know I like to challenge them to take a day off from the market, like just do, read a book, go work out, do something to get your mind, get your mental right, or off of the market and just, break free. So always I challenge everybody that watch the show to do the same thing. Tomorrow, relax, right? It's a day off. The market not going to be open. Go chill with your kids, go to the gym, do something, you know what I'm saying, to kind of just get a nice little mental refresher, right? But then we come into Tuesday, right? And we got Empire State Manufacturing. I don't think that's going to be a big deal, but it's a rare folder, right? And again, it's a short week, right? On Wednesday, we have retail sales, right? So it is the week of the consumer, right? We're going to find out about the consumer. Now, we already got a little bit of an insight from the banks, right? They tell us, yo, they got more money. Consumers got more money in the bank. Now we're going to figure out, are they still shopping? Now, this is probably December's data. So you got to think about holiday shopping. It's a look back. So this might come in hotter than expected, therefore showing that consumers are still supporting the market. Because we are in a new year, I don't know how this market is going to react to the data. I know how it used to react last year, but this first month is all about observation. So based on how the market trades going into this, we could pop, we could dip. I don't know. I need to see how Tuesday trades in order, but just know this could be a market moving event. It comes out at 8:30. Just be mindful of if, like I was saying, my main thesis is this. If data comes in favorable, as far as just we still on that path of rate cuts and all of that, and the market might continue to rally. Anything that comes in unfavorable that shakes that narrative, that's when I think the market could sell off. So depending on how the market interprets this data, we'll see, right? Then coming in on Thursday, we have a Fed member speaking. We get unemployment claims, so ain't nothing much popping there. And then Friday is we get consumer sentiment, but it's also OPEX, right? It's also options expiration for January. And this is the big thing about options OPEX for January. A lot of leaps will be rolling off the board. So expect some type of volatility this week because of that narrative alone right there. Like leaps are going to be rolling off the table. So it could be some things going down. Now, again, shout out to, I want to say it was the compound. I'm pretty sure this one was the compound. They had a dude named JC Paris on there, and they shared some data that basically said, hey, listen, the week that's usually bad is the week after OPEX, right? Now, most people bet on OPEX being a down week because of contracts expiring and all of that. But his data showed that it's usually the week after. So with that being said, and knowing that the market has got a lot of momentum, and wait till we get into the indicators. Oh man, I'm on board with that. The last time we had some short weeks and rare folders like this, they have usually been bullish weeks. So that's my baseline. not to mention we got that bullish engulfing, and I was wrong last week. So, I should have never got off the bull train, right? That was just a little shakeout, right? That was just a little shakeout. And they got me, but I'm back. I'm back. I knew I was wrong, and so boom, I got back. I said, "Hey, y'all ain't gonna leave me, cuz I know y'all ain't gonna make these new all-time highs." What I say, So, with that being said, right, like I said, that first week of the year was probably like a little bear trap. Another thing that I do want to say, and we're gonna show this tonight, is that some of my indicators are very mixed and they are diverging. They are very mixed and diverging. So I'm gonna be very honest with y'all. When we get through this data, is mixed is by divergence. So I may say one thing and then I'm gonna come back and y'all gonna be like, yo, but at the end of the day, I have to then break it all down and say, okay, ultimately, what am I gonna lean on? And I'm gonna be with y'all. My number one indicator is price. And right now, price is telling me it still wants to go up. However, I have my supplements and my auxiliaries, and we're gonna go through that, right? The last thing I would say this upcoming week that's big is potential government shutdown. That potential government shutdown. So yes, we got some deals done and all of that, but yes, it could come back up on the 19th and they still have to get more deals. So they need to watch all of that, right? And so that is like this upcoming week, right? It's really all about, Wednesday, we're gonna get retail sales. Friday, we got Opex. And so those are your big drivers along with earnings. So that's gonna get me into earnings. Damn, I hope that was big enough so y'all can see that. I just now noticed that shit super small on the screen. But I'll make sure y'all can see this though. Make sure y'all can see this though. And then Ron say that the VA come out of Zay when he say cut. Hey man, 757 representative. Jarrell say, hey Zay, they have a live economy news indicator on TradingView now, just in case I did. Now I don't know. What is that joint? I'm not even sure what it is. I like them stores. TJ Maxx, Marshalls, always booming over the holidays. Definitely. Stoner. Oh, I like this guy, Stoner Jeff. Shout out to you, brother. Sativa Sunday, bro. What's good, man? First time on the live. Appreciate you for tapping in, my guy. And then Ron said a VIX expiration is on Thursday. Okay, I didn't know that either. So, but that usually plays a big part. So just know that we do have VIX expiration on Thursday. But as far as the earnings calendar goes, so on top of the macro that we have, earnings wise, it's banks still, right? So it's mainly regionals, right? It's gonna be a lot of regionals. So you got Goldman Sachs that pops us off this morning, Morgan Stanley, PNC. Shout out to PNC, yo, they've been rocking and rolling. After the close, you got Interactive Brokers. Y'all already know. Shout out to Charles Schwab, right? Yo, shout out to Charles Schwab. Wednesday before the open. Prologis, that's a REIT company. Watch out for them. You got Alcoa after the close. You got Discover, right? That's another sleeper, Discover. Who else? Truist. So they report this week, right? So shout out to my boy Kevin. He said Truist, that's TFC. You got M&T Bank, you got First Horizon, Key. They also report. So Truist and Key report on Thursday before the open. Just be mindful of that. Then we got JB Hunt, so that's trucking. First National Bank, some more regionals. Then you got Ally, more regionals, Travelers, more regionals, State Street, more regionals. So this is the week of regionals. Now, with that being said, man, I always try to bring some type of value or some type of gem. And so I was talking to my wife and I was like, babe, this week it's going to be a tough week, man, because I feel like, you know what I'm saying? It's really not that much that I don't know. I don't really, what can I really dig in the bag and be like, yo, I ain't really share. So I found something. And shout out to AgileTrading for this. So I'm going to share with y'all the DPST. This is the Daily Regional Banks Bull 3X ETF, right? And so I'm bullish regional banks. I'm not even going front. Look at this setup, okay? Look at this setup, right? Now, it has a base that has been building, and you can just tell from a pivot perspective, that is a double bottom, right? So just look at this entire chart. Now, I don't think this thing going back to $1,000 or nothing like that. But my point is this, is that it's forming a double bottom, right? And we know that if regionals, right, if regionals can recover, and now let me zoom in, bro, if I just do, so from this pivot, first of all, right, if it gets back over 97, look at that, right? And then from a pivot perspective, I'm going to just do this one. That's 150. Now, we talking about this ETF. We talking about this ETF. Oh, my car. I didn't even delete my data. Damn. Okay. I'm gonna have to go to my let me switch my camera real quick. See, I was messing around and I didn't even delete my old thing. So now I gotta go to this real quick. Yep. All right. Okay, so back on track. I'm gonna cut that off for now. And okay, so like I was saying, um, if we get up to this pivot, that's 150. So we talking about 85 to 150. That's almost 100% on the ETF alone. That's almost 100% on the ETF alone. Now, again, if we talking about pivots, right? And let's be real, right? If this is a double bottom, it truly can retrace at least back up to here, which is 225, right? And then, right, this is the beauty of agile trading, right? I use all technical techniques that are known as well as different fundamentals and macros, right? Now, right, from a pivot perspective, I got us going to 225, right? Now, for all y'all ICT lovers out there, clearly there is an imbalance, right? And if we really want to retrace, it will really want to come up to at least the wick of this candle. So that's 240, right? So this regional 3x bull ETF of DPST, if these regionals go crazy this week, this ETF will go crazy this week. Might want to put it on your radar. That's all I'm saying. Don't jump in it. Do your own research. This is not investing advice. I'm not telling you to go out there and buy it and nothing like that. Let me go ahead and get my disclaimer out there. But what I am saying is this is an ETF that I wasn't even aware that they had this. And when I saw this, I said, oh shit, this is fire. Because this is even better way to play the regional banks. So that's the gem, or one of the gems for tonight, is that earnings is very heavy, regional banks, and this chart and this setup looks very bullish. I'm just saying. Now, with that being said, let's go ahead and get into the indicators that be indicating, right? So when we transition into the indicators and we get into the risk, we get into the board, I know we got to get into it. So getting into, right, our first quarter risk, right? Let me move that out the way. First quarter risk, right? So let's get into y'all know I usually like to start with I guess I'll go through here, right? I'm gonna do it this way. So investor sentiment, right? We'll switch it up a little bit tonight. My very first risk is investor sentiment. So we're gonna get into investor sentiment real quick, right? Now, I have to say, on my list of indicators that I use to build out my conditions, investor sentiment is one of them. And I have to say that this is a red flag. What happened here? Okay, that's fine. Yeah, it's a red flag for me right now, right? It's a red flag for me because let me show you why. So when it comes from an investor sentiment standpoint, when we looked at this, remember how I said last week that I wanted bearishness to stay below 30. I wanted this to stay above 40, and I wanted this to stay here. Well, it stayed exactly the same almost across the board. So the bears are still in the minority, and majority of the herd still bullish, and we still got 27% at neutral, right? So the market's still showing bullish tendencies, right? So remember I would say like look, this is a reset. Usually when a number's in the 20s, I kind of want to be in that camp. I'm not going front. I'm cautiously bullish, but like this is like a red flag for me, right? When I look at my conditions and build out my data, the fact that this is way it is, this is a red flag for me. And that I want to be aware of some type of top forming or anything of that sort, right? The other thing is fear and greed. That's another concerning factor for me in that we were operating in extreme greed, but we're still in greed, right? So if I go to the timeline and blow this up a little bit more so you can see how like we're operating here. We did a quick little pullback, bounced up. And so again, we do have room to continue to go higher, right? To create that top or to go to the 4,800 plus or whatever. But we operate in greed. When people greedy, you need to be fearful. When people fearful, be greedy. So again, sentiment overall is just a red flag for me. It doesn't mean you have to sell. It doesn't mean we can't go higher. But for me personally, data wise, it's a red flag, right? It's a red flag. Then when we get into, say, the yields and the dollar and energy, right? Those were our risks for last year. Those were our main risk indicators for last year, right? Those were really the market movers. So when we start with the yields, right, and I'll go into, say, the 2-year, that doesn't look good, right? Yields are still coming down, right? The 5-year, the 10-year still under 4%. So is the 30-year. We go look at TBT, which is my proxy. It had its little bounce. Remember how I was saying, look, after 9 down weeks, it's probably going to retrace. Well, I think we might have got it, right? And so this upcoming week, we going to see if they pull back and have another leg down. You know, that might just be all you got. That might just be all you got. Or at the end of the day, they could just be going through this period where they consolidate, right? Remember how the whole time I've been tracking TBT, we have our downfall, and we know January, February, they like to consolidate. So maybe the yields are just going to be consolidating and we're here at equilibrium, right? That also brings us into the dollar, right? When we look at the dollar from a monthly perspective, it's kind of retracing, but that could be the end of it, right? We knew that it would retrace. If I go to a daily, it's this volume gap. We got into it, but then we rejected. And now it's just literally been going sideways, right? The dollar is literally going sideways, right? Yes, this could be a bottom and we could go up or we could come back down, right? We don't know yet. And with this being Opex, honestly, if I go look at a weekly, this looked like the stair steps down that I've been talking about. So down, up, down, up, down, up. Now, are we going to come back down or does this keep going up? I don't even know if what are going to be the main drivers this week. I guess retail sales might drive the dollar. There's no events this week that really are like dollar drivers, right? I.e., that Red Sea situation and all of that stuff kind of happening. We kind of got to watch out for that. But my point is that the dollar is kind of going sideways. And remember how I said in the 2024 outlook, I said, I don't think the dollar is going to be what it was last year. And this is I love it because the data be talking, man. And it looked like it's even though it's early in the year, it's turning out to be that kind of story right now, right? And so that's the dollar. And then last but not least, when we talk about oil, right? It seems to me it could be building a base, right? I'm going to continue to stick to my data, which is that it was supposed to be faded until the end of December, early January, and then we look for seasonality of January through April. And this is where I really want to talk about that Middle East stuff because it's heating up. I've been watching, I was collecting some data, and they may not be being as truthful or honest and upfront as what's going on with these shipping lanes and all of that stuff that's going on in the Red Sea, because clearly companies are coming out and saying, hey, look, Tesla, the first one being them saying, hey, we delaying deliveries because of what's going on over there. It's impacting the supply chain. So like, yeah, bruh, this thing might, okay, let me add on more. Now you got the United States doing airstrikes in Yemen on the Houthis. I pronounced it wrong, but I got it right. The Houthis. Okay, this thing's starting to spread, man. And I said, look, man, we got to watch this, but God, man. And okay, so now that the United States bombing the Houthis out in Yemen, it's only a matter of time before we see Iran get involved. And then once Iran get involved, we got some shit going on in the Middle East and it's brewing, bruh. And the market kind of like war, but this different, right? I don't know how this going to play out. So just know, yeah, it's getting worse. It's getting worse. And so that all I can say is that can have some big effects on the energy and commodity resurgence, right? As I've been collecting data, here's some of the headlines, right? 12 days ago, they were saying oil prices could go up, right? As the Iran ships was entering the Red Sea, right? And then oil prices could spike 20% in the Middle East as conflicts disrupt in the Strait of Hamas, right? So listen, man, it's getting real over there. It's getting real. Kevin say, so based on what you're seeing, you don't think the decrease in the dollar is going to be a bullish sign? I don't know. It may not play its part as it could be, but I don't know. And there's no telling if the dollar is going to decrease or not. But all I know is the dollar just may not be as big as a factor. It may be the yield and the VIX that come back into play or something like that. Stone and Jeff say every toy company being affected by the Red Sea situation. Look, even more. That's what I'm saying. So might play out to be the Black Swan. I don't know, man. That's to me. All right, Ron. The reason why I would say this, it may not play out to be the Black Swan because it's a known risk. We already got it on the board. So I don't know. The next thing I'll say is this: on the other risk is any news or indications the Fed will have to hold rates for longer. We got it. The FOMC minutes, as well as the labor market, as well as this CPI or this inflation report that came out, it all points to no rate cuts in March, right? Inflation remains elevated. We'll see. Our valuation's too high. We'll get into that in a second. And let me see. So I covered I didn't talk about the bond market. So let's go talk about TLT real quick, right? So in partnership with the yields, the bond market, it pulled back to 95 and it held. So if we can get back over 99 and get back into 100, that could be another signal that, okay, the bond market is, the treasury is going to keep coming down. The bond market is going to keep recovering. And maybe that's good for equities. It's definitely going to be good for small caps for sure. So shout out to IWM, right? And then Ron said, the market is still optimistic on a rate or March rate cut, 7 cuts. They need to get off of that. We may get just 3 or 4. I don't even know how many we going to get, but I'm going to stick with what the Fed said, which was 3. When they came out with that dot plot, it implied 3 from them. So I'm going with 3. Same way I said, listen, I won't say we're not going to be done raising rates until they say they done. Same way I'm saying with the cuts. I'm sticking to what the Fed's saying. I don't care what this market is pricing in, but you're right. The market is very optimistic, but I will just use that data to understand what's going on, right? So that's why when we had this pullback, I understand that the market is ahead of what the Fed is saying. So therefore, if any data comes in unfavorable, the market is liable to pull back. Just know that. So, you got to be able to know that and see through that. And maybe it could be a buying opportunity, right? Now, we did the yields, we did the bond, we did volatility. Did I do the VIX? I did not do the VIX. Okay, so let's talk about the VIX for a second here. Let me get rid of that. Man, the VIX is trash. It's been trash. It still is building that base. Let me get rid of some of these little things so y'all can see what I'm seeing here, right? So at the end of the day, it's building a base, but again, okay, the Red Sea stuff could be volatility, but it ain't making the market if the Middle East stuff starts to heat up a little bit more, okay, I can see volatility jumping. But outside of that, like economic data and anything like that, I'm not seeing the data there that's going to make us have a big volatility jump. Therefore, volatility is just going sideways. It is what it is. Ron said volatility going to be wild today at the March FOMC meeting. Maybe when we get there. I mean, look, bro, you going so far ahead. We got to get to the January meeting. He talking about the March meeting. Can we get to the January meeting first of all? You know what I'm saying? Like, look, man, one thing I'm going to tell you. This is one of the lessons that I was saving, but I feel like this is the perfect time to interject it. So part of my monologue was going to be, listen, my title of this video is the stock market is the only place you could be wrong and still make money, right? And within that, you have to know, or I know this, and I would just give anybody this advice. I would say this: I'm smart, but I am smart enough to know that I can't outsmart the market, right? That's where a lot of traders and investors go wrong. They want to be so far ahead and try to outsmart the market that ultimately you're wrong, right? I'm sorry. In my book, if you're early, I'm wrong. If I'm early, I'm wrong. Meaning if I'm early to a trade and it goes down, I get stopped out, but it turned in my way and it go in my favor, I was wrong. I was early, cool, but I was wrong in my approach, right? My entry was wrong, whatever. I was wrong. The market wasn't wrong. I was wrong. My system was wrong. Whatever it was, I was wrong. But the point is this: sometimes we get so caught in seeing the move, right? Seeing the move like, oh, if this happened, that ultimately you early and you're wrong. And then you lose money instead of letting the move happen, play out, and then waiting for the conditions to play out, right? That's why I said, listen, when I pivoted last week, I was like, yo, I was wrong. That's why I got right back on the bull trade, because I've been bullish since the October lows. So why change? 1 week should not have changed my outlook, and it didn't. But I just knew that, okay, after 9 weeks, I was like, okay, at some point we're gonna have a down week. And we had it, but I should have remembered. Listen, you also was like, yo, it's acceptable. That was a healthy pullback, and clearly because they bought the dip. Right? The herd bought the dip, right? And so, what I would say is, like, as an investor trader, sometimes you have to, like, be careful looking so far ahead that you basically front run the market too much. That would be my thing. Like, let's get to January and see what happened. Don't be worrying about March Fed meeting. We ain't even get through January yet. So that's that, right? He said, my bad, planning my moves. Hey, listen, proper planning prevents piss poor performance. I feel you. We there, right? Odin Ryan say facts. The market is like bossing you in. You be ready to counter, correct. This is why I like swing trading is more data than sentiment. Exactly, Ryan. That's why I love swing trading. This is a swing trading channel, right? Remember, this is my identity. So when you watch this channel, just know this is what you're getting. I am an investor that knows how to trade. I'm not a day trader, but I know how to take advantage of short-term opportunities. So therefore, when you come to me, when you talk about that short-term stuff and all that, just know that ain't where my head is. Trust me, what you may say is valid, and yes, it can play out, but I'm also looking at a longer trend where I'm like, okay, that's cool. That's acceptable in what I see, but just know I might buy that up because the longer trend is something else that I see, and I'm waiting for that to play out, right? So yeah, I would just say that. But getting back to the indicators that be indicating. So my point is this: the VIX is trash. Volatility is trash. Who knows when it's going to come back into the marketplace? We'll see. Right now, I have to get into another big red flag, y'all. Momentum. Okay. Now, I don't know yet if this is a good thing or a bad thing. Right? I just say it's a red flag because it's diverging very, very heavy. Okay. And what I mean by that is last week, right? Momentum had a down week, but the market went up. Now, y'all remember the last time we had this happen, and I said, yo, if this thing turn, we could break out. If I go back to the SPX, that's when we got down, blasted off, and blew through whatever. Matter of fact, I will go back to it. It was this week here. And so that was back in November. So let's go back to SPX, and bam, right? And we just kept going. That was, matter of fact, the episode was, oh man, it was like the bearish pivot or the bear blitz. That's what it was. The bear blitz. During the bear blitz episode, I said, yo, the market still went up, but momentum pulled back. But if momentum go back up, the market could just keep going, right? It don't got to stop. So literally this same situation is playing out, and that's why it's always good to remember data over emotions, right? Agile trading, the birth of agile trading, because we have that same thing playing out, which is that from a weekly perspective, momentum pulled back, but yet the market still managed to go up. So you got 46% of stocks that are above their 20-day average. We go look at our longer average at the 50-day. You got 82% of stocks, right? So you can see how it's just coming off of that roof a little bit. We go look at the 200-day. It's coming off the roof, coming off the roof a little bit, right? So it's just pulling back, right? But you got to understand, this is the third time we got here. So those longer term averages can still kind of shoot up, and the shorter term averages have reset. So it's important to understand how to read these indicators, and that this short term, it's got room to go back up. And our longer term averages, the 50-day, is cooled off, right? This is the entire market. So 62% of stocks of the entire market are above the 200-day. It pulled back and cooled off, right? And so therefore, listen, if momentum come back into this market, these can go back up, and that means, we could go. Look, all right. The episode I left off before I went on vacation, remember, one of my bold claims was we could see SPX run to 5,000 by the end of January. And my faithful Sativa watchers they will say, yo, you said that. That's true. And I'm looking at these indicators and I'm like, look, they divergent, but they can go up and make that move. And that might be like the end of the rally, but you don't want to miss that move. This is going to be some money made, right? You don't want to try to front run that or try to short that because we don't know how high we can go. So what I want to say is, from a momentum perspective, while it is a red flag for me because it's diverging, meaning that my momentum indicators went down, but the market went up, this upcoming week, they can go up and push the market up, i.e. squeeze into Opex. Okay. So that's just one thing. Now, the last thing I'm going to share before we get into kind of like wrapping it up is going to be, of course, the sauce indicators, right? The sauce indicators. So let's go take a look at the faithful sauce indicators, which is the BP/SPX and then the NASI. And again, sauce indicators are definitely another red flag, right? Another red flag. So why do I say that? Look at it from a weekly perspective. The BP/SPX did not go up, and we had an up week. Now this now marks this was the candle when we had that down week, and then we just had an up week. But look at the divergence there, right? And then when I throw it on the Heikinashi, right? Y'all know I like the high. Remember how I said we got to watch for this turn? Look at that. If I zoom in, 2 weeks, we now done got these red ones. So like, that concerns me. However, if it goes up one more week to create the divergence that gets us to the all-time high, that gets us to continue rally, it is possible. I went back and did some data collecting to see like, okay, if we turn, have there been times when the market has kept going up? Very rarely does it happen, but it's possible. So, but red flag, big red flag, big red flag. So what I'm saying is this, is that while yes, I think we can make an all-time high and we're getting close to like a breakout, it may not last long. And then I'm looking to pivot back into sell to rip because I just might have been early last week. I was probably early. And I see that, okay, I might have to get back to my original thesis. Let us finish out this run to 4,800, 4,900. But after that, oh, baby, I'm ready to sell the rip. Right? So I move quick. That's the part of being agile, especially with trend trading and swing trading. When that trend change, you got to be ready. So I'm just telling y'all now from a BPX standpoint, we could go up a little more, but it's turning. And the same thing with the NASI. The NASI indicator, we finally got our little turn. And y'all know that when we get this turn, usually a couple weeks later, we have a downturn. So while the downturn may not be this upcoming week, it may not be next week. All I'm saying is after January, going into February, March, which are usually seasonally weak points in the stock market. Let me put it out there right now for all 100 of y'all that's watching. Seasonally, the weak periods of the market are February, March, August, September, and October. So we can have a strong January, but just know we may be on the cusp of some weakness, right? And so, we right here, and I'm just kind of cautiously bullish, man. The turn is coming. That's all I can say. And so that is the sauce indicators, man. A big red flag. They're diverging. I don't like it. And yeah, I gotta just say that. And the last one is when we talk about, like I said, valuations, right? Remember I said our valuations too high. Y'all know I got the PE/SPX. Gotta show y'all that. And then I'm gonna come to some comments that I see. What happened? $ PE. Maybe it's $ PE/SPX. PE/SPX. There you go. Bet. All right. Well, weekly. I was about to say, come on, doggy. Don't do me like that, no. Oh, shoot. Almost knocked over my drink. Sideline thick. Pause. Pause. All right. So look, the valuations, right? Is the market, god damn, is the market expensive, right? Is the market expensive here? So let's go ahead and zoom in. And listen, we're in earnings season, okay? And this is a question I asked the runners. I say, hey, look, if we just came out of an earnings recession and earnings trough, and 2024 earnings is expected to show, if 24 earnings is expected to show growth, should we expect PE expansion? Right? And so when I look at this graph, I was a little concerned, like, okay, maybe we get to 26, but I don't know, right? Check this out. Check this out. Oh, y'all gonna love this one, right? So let me go back 3 years. God damn. Okay, yo, I gotta get a stock charts account because these ads are ridiculous. But let me zoom out a little bit and show y'all this. I'm sorry for all these damn ads. I really do apologize. But here's what I want to show you. So this is valuations, going back to when COVID made them janks skyrocket, right? COVID made them skyrocket. So my point is this. If we've had an earnings recession and it's now over, and companies are expected to grow their earnings in 2024, can we expect for this to continue to go up, get above 26, and maybe hit some of these higher data points, right? So if I add price lab labels, right, 26.95 is possible, and above 26.95, we talking 31, maybe even 30, right? And again, we possibly could have PE expansion. Let me share a little bit more data on this one, right? I gotta hook y'all up on this one because y'all gotta understand. I was a little worried if I was gonna be able to bring y'all some game, but I remember some graphs that I got that I could fuck it up. I can show y'all some good shit. Where is it at? Damn, let me find this junk. Maybe I missed it. Maybe this is it. Yes, this is it. There you go. Okay, let me share a little bit more data with y'all, right? So shout out to JP Morgan, right? JP Morgan for this data. This is what I want to show you guys. Value versus growth, right? Value versus growth. Valuations and interest rates. Now, what I want to show y'all is this. Value versus growth, relative valuations, right? PE. Now, what this represents is gray bars recession, growth cheap, value expensive when you up in this 1.2 area. Now, when you're lower, value is cheap compared to growth, right? So what does that mean? I can show you right here that the current PE of value, meaning the Dow stocks, are at about 14.9, right? Long-term average is 14. Growth is at 26. Long-term average is 20. So meaning growth is a little bit more pricier than value right now. So if you are looking to kind of bring this in more balance, if we are looking at that rotation for 2024, this is why it is important to understand that why you got areas like healthcare outperforming, energy might perform, financials might perform, biotech might perform, the regionals might perform, right? Because those are value areas, right? And we know that in last year, growth killed it. Well, I mean, Mag 7 went crazy, but i.e. tech killed it, right? So at the end of the day, this is just some more data that shows you like, yo, actually, valuation is not that bad. You can actually do a little bit more. Like you can afford to go up a little bit more. And then the last one was, where's it at? I saw the other one that I did want to share y'all. This one, right? So look at this. Performance of the top 10 PE versus the rest of the market, right? So when we think about the top 10, that's basically the Mag 7. Their PE is 26.9. They made up 86% of the return last year. The remaining stocks, they have a PE of 17, and they only made up 14% of the return. So what does that mean? That means going into this earnings season, okay, tech may not do good, but if some of these other sectors can do good, you can see the rally broaden out, and therefore, you can see other companies run. So is valuation a stretch? Not really. You got to really dig into the data. You can find gems that will do good. Shout out to Shout out to WD40. If you follow me on Twitter, I did an earnest play on WD40. That ain't boomed. 18% on earnest. You know what I'm saying? I made 1,000% on that play. Shout out to WD40 because I did the research, right? So it's stuff like this that, you know, the market is in a weird place. But listen, man, I think I said it early in 20. I think I said it the very first episode. It's gonna be a stock pickers market this year, right? You're gonna really have to do some research, understand use cases in order to make money this year. Hopefully, my show can help you do that, right? Hopefully, I can help you do that. And so that's valuations. I just wanted to show y'all a little bit of that data. And so with that being said, now what we're going to do is we'll get into the technicals and kind of wrap up this show. So we right at an hour. I usually like to keep about an hour and a half. So that's perfect. Let me go to a few comments. My man here, he said, you said something about oil. I had the same idea. Definitely got into XOM. Yeah, basically, you know, I talked about that oil jank. Stoner said, that's crazy because I'm learning the day trade, but also wanted to pick up swing trading too. And boom, here's the channel. Sativa trapping. Nah, I appreciate you. That's crazy. I learned the day trading scout, but I wanted to. Yes, sir. Yes, sir. Yes, sir. And he said, you did say that for sure. Appreciate you, all ground Matt. That's my guy. If you're trading view, click the BA. You'll see that you haven't taken the highs yet on a regular basis. That is correct. That is correct. This week data might be my favorable for DXY. Okay. Jarrell, I say y'all like the videos. They giving a lot of good info. Appreciate you, Jarrell. Yeah, man. Listen, man, I always try to share that good stuff, man. I always try to share that good stuff. All right. So with that being said, let's get back over here, right? So that's a lot, right? That's a lot. So that was basically the indicators that we indicating. As you can see, that's why I said, look, man, it's mixed. And so ultimately you got to rely on price, right? So as I go to wrap up this show, y'all know I like to talk about what are risks to this rally, right? Now, if we go and look at this from a pivot perspective, man, this looks like we could be on the cusp of a breakout. We look like we could be on the cusp of a breakout, right? And so some of the risks to the rally are, of course, some technical gaps, right? We know the VIX, right? Retracing the VIX. We talked about that. The yields, but they kind of just doing whatever. The dollar, oil, right? So right now, it doesn't seem like the risk factors are at a risk, right? They kind of seem contained, right? And with that being said, if we were to even pull back, right? If we were to even pull back, I need y'all to understand what the damage would look like, because when you assess the damage, sometimes it don't even be looking that bad, right? So if we were to pull back 1% right now, just know that it only gets you to 47.35. So when you look at this structure, that doesn't get me feeling super bearish. At least not yet, right? Because I know that in order to truly get bearish, we really need to get through this 46.97 for real, right? And they fumbled the bag. So actually, let me get into that. Because here's the thing. And I would also say this: 2% is 46.88, right? So 40. Let me see, what is 2% at? Right there. So we would need at least a 2% pullback to somewhat start forming the M, right? Y'all know what I'm talking about. The double top, the M, right? We would at least need a weekly 2% pullback this week in order to get that. Remember, I just went over all of what is going down this week. Do you believe we have enough catalysts this week to have a 2% drop? I'm going to let y'all answer that question. And you don't got to put that in the chat. That's a personal question for you to answer on your own that can help guide your trading this week. But I'm going to just let y'all know. Personally, I don't, right? And again, just like last week, I always tell y'all, it's okay to have a bias. Just when you know you're wrong, don't stay wrong, right? Again, this is the only place you can be wrong and still make money. The Art of the Pivot Part 2. Every episode, I'm telling you, I always have great titles because I'm always dropping gems, right? At the end of the day, this is the only place you can be wrong and still make money. I was absolutely wrong last week, but I still made money. You know what I'm saying? So it's okay to have a bias. Just don't stay when your data say you wrong, pivot. Right now, with that being said, for the Bulls, right? They had a rough start to the week, rough start to the year, right? And it, to me, I'll be honest, it was likely just a breather, right? When I go look at the daily, that pullback, it was mad gappy. It looked weak, and that's why I really wasn't sold too much. And I think I even mentioned last week, I say, look, because of this wick, we might be open for a retrace. I didn't think we was going to retrace like that, which is why I was willing to have that's why I had my hard stop. Like, listen, we get past 47.27, my bearish thesis out the fucking window, because that right there told me the Bulls still got it. And then when I seen this candle and it was bullish engulfing, I said, oh my God, I fell for the okie doke a little bit, but it was okay because I didn't get rid of all my longs, right? I knew it was just a head, so I did some things right. I also did some things wrong, but it was all about learning and trusting the process, right? When we bounced down here, I had some good puts. I probably should have took profit. I didn't. The short puts got smoked, but then I was still able to get out of some puts with some profit and pivot. But again, it's just I was sticking to my plan. I was sticking to the data. I say, yo, we don't get above this, I was still bear. As soon as we got above that, all my triggers kick in, did what I needed to do, and I'm okay, right? Did I leave some money on the table? Absolutely, right? But that goes back to one of the lessons that I had last year, yo. As a trader and as a investor, you have to get past the 4 fears of a trader, which is FOMO, missing out, leaving money on the table, and exiting early, right? It's going to happen. It's going to happen. The sooner you can be okay with it and say, you know what? I build it into my plans, you will be you will be better off when you get out of trades early, or if you leave money on the table. If you're not in a trade, you won't feel like, you won't FOMO. If you do FOMO, you won't feel bad, because dog, it's just a part of, that's just what happens, man. In trading, every trader goes through it. So the sooner you can accept that and just recognize it and know what to do, the better, right? So it is what it is, right? And improve. Trading all about improving, getting better, right? So with that, right, with that kind of being said, like I was saying, I think they took a breather, right? They just gave us a nice bullish engulfing candle. And so while, like I've been saying all episode, I am cautiously bullish because I do have some red flags, right? Some of my indicators are red flags. I pointed those out. But like I told y'all again, the best indicator of all is price. And it's telling me it wants to go up. And so as long as the Bulls keep this market above 47.39, let me make sure I got my numbers right. Yes. So that's going to be the reason why I'm saying that is this right here, right? That means this is the low of Thursday. As long as the Bulls keep this market above 47.39, then I'm looking for 4,800 and above, right? Now, let's look at it from a bearish perspective. They fumbled the bag, right? Now, they were able to test this 41.91 area down here, right? And we swiped these lows, but then support came in fast and furious, and we blasted through the 47.27. Took the bears out. Bye-bye. Go back into hibernation, my guy, right? And so at this point, I do feel like the Bears are trying to mount somewhat of a defense around this 47.80 area. So as you can see, we got rejection here, rejection here, rejection here, rejection here, and all of that stems around the 47.80 area. And if you go look back in the past and you look at the pivots, you'll understand why, right? The 47.80 area, where's it at? Shit, I gotta go to a daily. I think it's like back up here. Yeah, there we go. Right, bingo. Right, so this 47 area in here was prior, like back when we first created our top. This was a very heavy resistant area, right? And so they're trying, look, the Bears are trying to hold us from going to all-time highs, and so they're trying to put up a defense at this 47.80. Now look at it, it's like this. Until we can see some daily closes, and I'll go to the daily, right? Come over here, right? until we can see some daily closes below 47.66 and a break below 47.39, meaning I need to, see this thing going like this, right? And have some closes under here, right? And really, we got to get back below my number I said last week, which was the 47.27. Then maybe the Bears could shake a little something. But until then, I'm gonna hit y'all with the zoom out approach. I'm gonna get rid of all of this. And I want y'all to look at this monthly, because it looks to me that the Bears might need to stay on hibernation until the end of the month. Because if you look at this monthly setup here, right? You look at this monthly setup here, you got about what was that, 8%, close to 9% in January or December or November. You got, let's say this, you cut that in half. Half of 9% is 4.4%. Guess what December was? 4.4%, right? Now, if you cut December in half, that gets you about 2.2 to 2%. Now, if we go and say, well, what is 2%? Guess what? 2% is 48.65. So that's your new all-time high. And maybe because of momentum and sentiment and FOMO and emotions, we can squeeze to 4,900. Again, when I go back to that episode, and y'all can quote me, I have to go figure out which episode it was, but go back. I want to say it was definitely one of the December ones. It was definitely one of the December ones. And I mentioned, we could have 13 weeks or a 13-week winning streak. And what if we go 20%, right? And so I went from this. I said, we go, 13 weeks, basically by mid-November, you go up to 20%. It got you to the 49.25, right? So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, right? Now we going on week 12. So we definitely could push it. We damn near at that 20% off of a 10% correction low. And so within these next 2 weeks going into Opex and the week after, I gotta say it. Look, I go with the data, right? And so overall, the data is, or hold on, let me see. I went back. I reviewed the episodes 12 out of 11 weeks. It's a short week. I believe we got a lack of bearish catalyst. The market has bucked any bearish data, right? So even with the hot CPI, we bucked that. I would say, along with some additional research that I've told y'all about, that basically the week after OPEX is the week. All of this leads me to believe that we might have one more up week, which is this week, right? And that we can finally get to the all-time highs. And then ultimately, like I said, look, before I want to end it, I definitely want to apologize for calling the herd dumbasses, because clearly I was the dumbass last week. I got it wrong, right? And I came and joined the herd, right? But that just goes to show you that, listen, man, sometimes the market, it don't, look, I'm not 100%. Sometimes the data can be wrong, right? Sometimes I can interpret it wrong. And I won't say it can be wrong, but it's divergent. I went through and showed you, listen, usually when we get them signals I showed y'all, the market be going down. This is a rare case where it's diverging from that data and it's doing something opposite. So clearly something is up. I know something is up. And so, with that being said, I go back, I review all my data, and I look at where I'm at. My something is up is that I think we're getting close to the end of this run, and that ultimately we will be getting a lot closer to selling the rip and most likely going bearish. Like I just said, it might not be until February, March, but my head on a swivel. My head is on a swivel. I'm keeping everything tight, my risk management tight. I'm being super picky with what areas I'm at, and I'm letting the data guide me, but ultimately I'm also, kind of letting all this stuff, play out, right? So with that being said, man, that was tonight's episode. I appreciate all y'all for tapping in. I'm gonna go into the comments real quick. I do see a question. If you got any questions, George, drop them in there. I got about 10 more minutes. I usually go for about an hour and a half now. And so if there's any questions, cool. If you enjoyed this episode, look, do me a favor. Press that like button. Don't forget to share this. Again, my goal this year is to try to average at least 1,000 views, per week. The more y'all share this, the more I can get people tuned in, that the better. And again, I'm sharing dope information every week. I'm going to have something fresh or something new. Like this week, DPSPT, don't sleep on that regional ETF, right? There was a few gems that I dropped all episode that hopefully, gave you, some clarity and things that can help guide you this past week. So yeah, let me go take a look. Let's see. Shanisha, what's good? She said this was a great episode. Thanks. I appreciate you. Can you go over BA? Sure, BA. I think that's Bowen. Oh my god. Okay. Oh man, that's right. I talked about Bowen last week, right? So Bowen had that issue, and yeah, it just it gapped down, and then it went sideways, and then it continued to sell off as more information came out about the whole plane issue. So all I can say for real is, man, you have to wait. All right. Again, shout out to AgileTrading, right? And this is something that I really like he do. And I think you could do this with any stock or, the market. He talks about a stool. And with that stool, it's 3 parts. It's a macro, fundamental, and technical. What you have to figure out is what is driving Boeing right now. Is it the technicals? Is it the fundamentals? Or is it macro, meaning news? Well, we know that what is driving BA right now is macro, the headline news. That whatever, they could have a positive cash flow, all of that. It don't freaking matter. They just had a plane panel blowout mid-air. That ain't good. So you gotta wait until the macro turn around. It don't matter if the fundamentals is good, how good the technicals look. The macro driving this. So as long as it's going to be bad news, then the technicals look bad. So therefore, you might want to, probably be looking to short this. I wouldn't necessarily be looking to short it just because you kind of, the time to get in on the short would have been like when it was consolidating here, and now it made that break. But I wouldn't touch BA right now. It's just not a good story. There's a lot better stories out there. And so I wouldn't touch BA right now. So yeah, I wouldn't. Yeah, that's my thought on BA. Dominique say, do you think Docu is making okay? So DocuSign is basically having M&A news come out, basically saying, hey, they might be acquired. Again, I go back to the same question I just asked, which is, what is driving DocuSign stock price? Is it macro? Is it fundamentals? Or is it technicals? Right now, it's macro news because it's rumors. Buy the rumor, sell the news that they might get bought out. They're being looked at as a acquisition target. You look at the technicals, I ain't gonna front. That shit it's at a base, but it still look terrible. So it's running on buy the rumor, sell the news. And I mean, you just need to know once that kind of juice fades, can the fundamentals, can the technos carry DocuSign higher? I don't know. So to say, is it making a bottom? It looked like it, right? It looked like it. If I let me replace this here. So I mean, it came back to 38. That's dead. That's the low. So it looked like it. It definitely looked like it, right? But we'll see. The live economic calendar is that indicator that I was talking about. Which one? I guess you're talking about this right here. You talking about this jank right here, the little lightning bolt with the purple, right here. You talking about that? I think maybe you talking about that one. Jarrell, you might just have to send me a message, bro. I know we be chopping it up on IG and stuff, so I'm not sure which one. Brandon say good info here. Appreciate you, Brandon Meadows, for tapping in. Older head, news, news Trump charts. Yes, absolutely. Brother say, what do you think about Juniper being brought out? Listen, I believe, did I share this? Did I say that was gonna be one of the big themes? I don't know if I shared that with y'all. I I don't know. Maybe I did. No, I didn't. Okay, so let me just say this. I don't think I had shared it yet, but so to answer your question, Brandon, as far as what do I think about Juniper being bought out, I thought I shared it with y'all. Maybe I did. My point is this year I expect to see a lot of M&A, a lot of mergers and acquisitions. It already started in the biotech field, right? When we had that JP Morgan conference this past week. A lot of biotechs have been getting bought out, but I am one of the themes is based on research and a lot of data that I've gathered and other economists and analysts that have done ground research. One of the things we could see is we might see that private money and that money moving around again. We might start to see more AI acquisitions. So that's going to be smaller companies being bought out, i.e., Cisco bought Splunk. You got HP that just bought Juniper. So yes, we're going to see a lot of a lot of mergers and acquisitions this year, and we've already started to see it. I mean, a lot have happened in biotech. You got some going down in tech now. So, my thoughts of that is that be on the lookout for a lot of mergers and acquisitions this year. So therefore, look, y'all know I'm a big believer in small caps and mid caps this year. That's one of the avenues you can play. Start doing research on small caps, mid cap companies that have room to grow or might be acquisition targets, and you can buy stock in them. And if they get acquired, boom, you make a bag, right? You just got to do the legwork. You know what I'm saying? You got to do the legwork. But I would just say, great question, but that's my answer on that. Stoner Jeff say, do you swing trade stocks? Your market indicators? Wait a minute, what? Do you swing trade stocks, your market indicators, or both? I use my indicators to swing trade stocks. Let me put it that way, right? I get what your question is. So I have a system, right? So my system is called AgileTrading, right? And it's built upon certain conditions, certain technical outlooks, fundamental outlooks, at macro outlooks. Like I'm data driven, process and data driven, right? Data over emotion. So I use a confluence of things to ultimately lead me to making decisions about how I want to, what do I want to swing trade? How do I want to swing trade? When do I want to swing trade? Right. And that might be complicated to the average person, but it works for me. Right. And I feel a lot better because I am kind of a big person on control. And so therefore, I can only control the inputs of my process and my system. And so the better input and data, the more controls I feel over it, the better I feel about my decision making. And therefore, I can let the market do what it do. And I don't be tripping if I'm wrong or if the market don't do what I think it's going to do. Because at that point, I've controlled all I can control. I can't control the market, but I can control what I do within the market. So therefore, as long as I am disciplined, I am consistent, I am patient, right? All the things that I talk about on my show, then therefore, and I follow my plan, right? If you go back and watch all my episodes, I talk about all this stuff. As long as I do that, then I know I could be successful in the market, and I am successful in the market. And so that's what I try to, talk about every Sunday when I do my show. So, but to answer your question, good one. And then last but not least, Chelsea say, thanks so much, Zay. So appreciate you, Jarrell, for tapping in tonight. I'm gonna call it a wrap right there. It is going on 1:30. I know most people probably watching the playoffs. With that being said, man, listen, I hope y'all enjoyed this episode. Don't forget, we're going to be back here again next Sunday, right? Live at 7:30 to talk about what I got right, what I got wrong again, right? Do we finally make this all-time high? Don't forget, all of the gems that I dropped. And ultimately, I want y'all all to have a safe, a good and safe trading week. And more than anything else, stay blessed. I'll holler at y'all next week. Peace out.